Welcome back to the channel. Thank you for tuning in. Before we begin, please take a moment to like and subscribe to the channel. Um, we have an amazing growing community. One step at a time, guys. Okay, so in today's video, it's going to be an introduction to ICT Order Block Theory. I'm going to be sharing some bits of information about order blocks. I mean real order blocks, not just some last done or closed candle shit you heard from some retail guy who doesn't know what he's talking about, right? So I'm going to be sharing you some real insight on some order block theory. So let me not waste any more time and get into it. Okay, so we have here nice clean chart. Obviously we on regular trading hours, so we can see um so far it's just price action, right? It's what you would typically get when you open you know a new trading view chart without any makeup or lipstick. I just want to I haven't done this way in a long time where I just show you a naked chart. Like in most of my videos, I'd go in there with the lipstick on, and sometimes I remember when I was very new, you know, I used to really appreciate the makeup or the lipstick. In other words, the stuff that I would put, I would appreciate seeing them on ICT's chart after I've seen the naked chart. Like, after I finish like this, it feels good to see it with the lipstick on. Because once I put on the lipstick, even if you are new to this concept, like you get to also feel that yeah, it was also meant to happen like that. Because these concepts, they are the truth. They are the way the market itself moves, right? There's no denying that when I was new, that's how I got raked in. That's how they got me. I was told to prove these concepts wrong, and when I tried to do that, there was no way I could prove them wrong. I saw them happening. I was convinced and stuff like that, right? So enough of the long stories. Let's put some lipstick. Right. So we don't have a lot of details, though we do have lots of order blocks marked on the chart, right? So apart from order blocks, there is nothing else on this chart. So apart from this, obviously this is just Fibonacci. I can use Fibonacci on order blocks to find the mean threshold of the mean threshold is the midpoint of an order block. I can also use Fibonacci to cater for the quadrants of the order block, obviously including the mean threshold there. When I'm looking at I'm not taking away spotlight from order blocks, but when I'm looking at fair value gaps, the same um, the same Fibonacci, I can also use it to cater for fair value gaps. But the midpoint of a fair value gap right there, that's square encouragement. So the midpoint of a gap, it's square encouragement. The midpoint of an order block, it's mean threshold. So from the get-go, I'm already sharing, and I hope you're taking notes, right? So midpoint of an order block is called the mean threshold. So the midpoint of an order block, it's sensitive. An order block is just a candle, right? It's just a candle. It has an opening price. So the opening price of an order block is sensitive. it has the midpoint. So the midpoint would be the halfway of the opening price. For example, if I was looking at this candle, if I was looking at this candle, I would have my opening price there, sensitive. I would have my main threshold, in other words, the midpoint between the closing price and the opening price. So the midpoint there would be main threshold. Then obviously the closing price. The closing price, you need an advanced level to like even think about its significance in price. For now, you only need the opening price and the midpoint. So we just need to know that those two levels are very sensitive. Um, to add to your notes, those of you who are taking notes, the closing price. So you don't expect price to trade to the closing price of an order block, right? So if I'm bullish, this candle here, let's assume that that's an order block. It might not be an order block, might be one. Let's just pretend it is. As soon as it would close above, as soon as it trades above the opening price there, that would become my order block. So even in future, if it does come back to retest, I wouldn't expect it to trade to the low of the order block, right? To the closing price of the order block. Okay, let me just use an actual order block to show here on me. So this is an actual bullish order block, right? An order block, what makes an order block, or what is an order block? The opening price of an order block, that's the order block itself, right? So the opening price of an order block, if I'm telling you this candle is an order block, it means your focus or or my focus automatically runs to the opening price. Yes, the midpoint called the main threshold is sensitive, but the one that I'm always like, even when I'm catering for order blocks, I would put um, my order block line at the opening price. So the opening price of an order block is the order block for your notes, right? So we can see price trading above the opening price of the order block day, and then comes back and finds support. It does trade below it there. What is that? That is called a mohawk. So a mohawk, it's just a small deviation in price between um between what was delivered in price and what would be regarded as perfect price delivery, aka, or in simple English, a mohawk is basically the difference between the low of this candle and what I would have expected to be the low. So basically, when I expect something like an order block to you know to have a sniper entry, aka sniper entry right there, this small weak, I wouldn't cry over that. That's just called a mohawk. So I wouldn't regard this as imperfect price delivery or invalid order block or something like that. So I'm just tossing that in mohawk, but um, that's a bullish order block. So the bullish order blocks will always be red candles for now. Think of them like that. So for now, bullish order blocks are always red candles. Bearish order blocks are always green candles. So bullish order blocks should act as support because they should always push price higher, while bearish order blocks should always act as resistance because they should always push price lower, as you can see here. So the opening price of this green candle, you know, price trades to it below, price trades below it there, then comes back, finds the resistance there, it goes down. So order blocks, guys, they're not necessarily one candle. For example, here, this bullish order block, that's one single candle, one single red candle, while this bearish order block, both of them are one order block, right? Both of them are one order block. So order block is not necessarily the last and not close candle or the last up or close candle. No, there's narrative. So again, 1, 2, 3 consecutive red candles. The opening price of these consecutive candles, if I mark that in time, you can see price trading above it there, and then coming to find support at the bullish order block. So meaning at the opening price of these consecutive candles. So can you see how it's not necessarily the last and not close candle? Even consecutive candles, that's one order block. So there's a lot of characteristics to order blocks and order block theory. That's why I'm trying to like share with you as much as I can, little as I can with the little time that I have to make this video. I'm trying to also I'm trying to correct some retail bullshit. I'm also trying to correct that with the little time that I have, right? So these consecutive candles, 1, 2, 3, the opening price of those 3 consecutive candles, you can see price trading above them using the gap. Obviously, I'm on regular trading hours, so it gaps above, and then it comes back and finds support at the opening price of these consecutive candles. Again, I told you this small wicks below. That's just a small deviation. That's just a mohawk. A mohawk is simply a small deviation from what would be compared as perfect price delivery and what we actually got. Sometimes it may be influenced by spread, because these algorithms, they work, they'll sometimes cater for spread. So sometimes you will see, sniper entries not being sniper entries. But eventually what I like is that you will always see something like this. That it might trade below here with the mohawk. Obviously, maybe you trade with this order block, that's fine. But it always trades. So it always gives you a perfect car. Can you see it here using this candle? These ones, yes, they go below it, but these ones, it goes perfectly. And then obviously the other ones trade higher, right? So that's a bullish order block. I told you the if we are maybe in a sell program, price is delivering sell side price delivery. In other words, price is going down. It's printing sell side. It's printing lower prices, lower prices. When you see something like a green candle being printed in price, what that means is that price was delivering lower prices. Open there, go high, go down, print the low, close, next candle. All the candles we were closing lower. But this one, it opened here and then went high to print the high and it closed higher. So this candle, the reason it closed green is because the closing price is higher than the opening price. Therefore, the candle is green. Now, what that means that the opening price of this candle, when it trades below that, the opening price of this candle becomes a change in the state of delivery. So the opening price of this candle becomes a bearish order block. So what I just did right now is that I told you what an order block is, and then I completed, I just feel like, obviously maybe if you're new, it might fly over your head. But me personally, in my mind, I feel like I just introduced you to order blocks and then I just made you to a pro in the same video. Because I'm telling you that an order block, it's simply a change in the state of delivery. An order block, what makes an order block, it's its opening price. So what makes the candle the order block is the opening price of that candle. Therefore, when price is delivering sell side price delivery, when it gets disturbed by this green candle, the opening price, as soon as it trades below that, that becomes a change in the state of delivery. So it automatically becomes a bearish order block. An order block is simply a change in the state of delivery. It is nothing more than that. trace to the order block there. You can sell that. Who are you targeting? Remember this consecutive candles? That's one order block. Within this one order block, there's this single one order block. This order block, can you see it holding price there, supporting price? This one, this one, can you see it also supporting price? So which order block is not traded to? This one. So out of all these three order blocks, that's one order block. But within these three order blocks, this one has not been traded to. This one has not been tapped. The opening price of this candle has been traded today. The opening price of this candle has been traded today. This one not traded. So when you are selling that order block there, it makes perfect sense to target what? This order block. It trades to it there using this candle. Can you see it? Right there you can exit. You don't have to wait for it to trade to the main threshold. Why? Because you might be interested in buying the main threshold. So that's how order blocks work. So price is gonna deliver, buy side price delivery, sell side price delivery, interchangeably, delivering from bearish order blocks to bullish order blocks. What it's actually doing is that it's delivering from premium to discount, meaning it's delivering from expensive prices to cheap prices. So the algorithm will, like officiate, like it will become a reverie. So it will make sure that there's balanced prices between sell side price delivery and buy side price delivery. It will make sure that there's balanced price delivery in terms of like premium and discount, expensive and cheap, in terms of bearish order blocks to bullish order blocks, all within the price. What like this concept, guys, they're crazy. But anyway, welcome guys, welcome.